Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, June 15th. We got a lot of data to go over today, so we're just going to jump right into it. And we'll start off with the weekly jobless claims. So last week we had 245,000 people apply for unemployment. Forecast was supposed to be 244,000, pretty much in line with last week's, but it dropped down to 237,000. So good numbers there because obviously we want fewer people applying for unemployment, meaning more people getting jobs here. The next two here we got are manufacturing numbers, and the first one is the Philly Fed, which is manufacturing in the Philadelphia area. In May's reading, we had a 38.8. It was a pretty hot number then. We haven't really seen that number in a while. It dropped down to 27.6, still a very good number here. So even though it dropped a bit, last month was pretty hot. So in this number, 27.6 is still a pretty good number here. Empire State Index, this is the manufacturing in New York region. So back in May, it actually contracted at a -1. But this month in June, it jumped up all the way up to 19.8. So a good number for the month of June. So at least we aren't seeing a trend of manufacturing going in a negative manner here. So good news on that aspect. Industrial production for the month of May. So we had a 1.1% increase in production in April. Forecast for May was supposed to go up 0.1%, and base came in nil at 0 here. Capacity utilization, we had a 76.7% capacity utilization. It was supposed to stay the same in the month of May, and it dipped slightly at 76.6. So not a huge number, not a big difference here. It's still pretty much in lines here. And last but not least here, we got the Home Builders Index. This is the confidence level for home builders around the U.S. And as you can see, month of May, it was 69, and it dropped to 67 in the month of June. So obviously, maybe home builders are getting a little bit more cautious as as the economy is hopefully picking up here, or might be a sign of the home builders getting a little cautious here. So that's something we want to keep an eye on, as we've had a lot of this pent up demand, but not enough supply. But there are some areas where they're actually having oversupply, especially on luxury homes in certain markets, where you're seeing a lot of them sitting on the market for a while here. So let's go ahead and take a look at the headline news. Stock market is down. They're still kind of digesting the news from yesterday on the Fed, from the Fed statement and everything. So basically, they did raise the quarter point. As suspected. She came in, Khalil Hawkins said that there will be 3 this year, and she projects maybe even another 3 next year in 2018. They could be under in their balance sheet, which is about $4.5 trillion of mortgage-backed securities and such. They might be starting that sooner, very soon, is what she kind of mentioned. So you may see that a little bit by little. They could probably trickle a little bit further down, probably later this year, probably in the fall. You might see them kind of selling off a little bit more here and there. But as we had mentioned about a week ago, China basically said that they might step in and start buying more. So that could help us out with not having a complete shock in our interest rates here. Also, another thing that's creating a little uncertainty in the markets is there's a report out that President Trump is being investigated for possible obstruction of justice, as Mueller's kind of filling in since Comey was fired. Now he's kind of investigating that and such. So we'll have to wait and see what develops there. Bond market, here we are. We had a huge day yesterday. As you saw, we even touched the second line of resistance, but we came back after that Fed statement came out. Stock market kind of adjusted itself, and bond market did too. We ended up closing up 31 basis points instead of in the 40s here. Now today we are down a lot further. We are down right now about 19 basis points. So here's where we left off, and here's where we are. We are right even down below the 200-day moving average. So kind of want to watch that, see if it's kind of important average to keep above. Even the 10-day, we want to try to keep above the 10-day, because 10-day can kind of keep you in one direction longer than you really want. As you can see, sometimes we get to 10-day, we get knocked down further. As soon as we go on the other side, we stay up a little bit longer. So I would still be a little cautious here about trying to get in there. We do have some potential, some more improvement for the rates, but again, if you guys are not feeling lucky, then I would go ahead and lock in today if I were you guys here. All right. You guys have a great day. If you guys do want to get more updates throughout the day, I do post on Twitter. Just find me at Mike Bjork on Twitter, and you can get some updates throughout the day. If you guys are looking for a mortgage, I do pre-approvals with the financing for home purchases, as well as I do refinances. We've helped clients do a lot of different types of refinance, from adjustable rates to a fixed rate, to people who are looking to cash out on the equity they have to reposition the money into other means, from debt consolidation to from investors to buying more properties, to people wanting to do a 30-year fix into a 15-year fix, stuff like that. So if you're interested, just go ahead and reach out, and I'll be more than happy to take a look at, see what you're looking to do, and see if I can help you out. You guys have a great day. Thanks for watching. We'll see you guys tomorrow.